very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumoyiwa Matuluko, and with me on today's episode is Christina Pius.
Hello, viewers.
Do you run a bureau de change? Do you operate a microfinance bank? What are the duties, the rights, and obligations of bureau de change operators and microfinance banks under the various tax laws, especially as agents for the collection and remittance of value-added tax? The program is Tax Matters. It's going to be 25 minutes of education and enlightenment on taxation.
On Tuesday, 24th of June 2014, the Lagos Island region brought together bureau de change operators in the Lagos area to sensitize them on the obligations imposed on them by law to deduct and remit value-added tax from their customers.
A bureau de change shall be construed as any company that is licensed to carry out small-scale foreign exchange service in Nigeria, and whose sole object is the carrying on of such business on a standalone basis. Small-scale foreign exchange service shall be limited to A. Dealing in banknotes, coins, buying and selling of travelers' checks. Operators in bureau de change industry are often in conflict with FRS on what should be their correct liability with respect to companies' income tax, education tax, value-added tax, and even in some cases with the State Internal Revenue Board in relation to pay as you earn, that is personal income taxes. This paper is intended to advise on the correct approach in determining actual tax liability for all the tax types.
Mr. Taiwo went on to define what constitutes cash flow or turnover for the BDCs.
Commission earned by bureau de change operators with respect to services constitute its cash flow, and the commission earned is taxable in the hands of the BDC operators. Hence, commission earned constitute turnover, while sale of forex does not. Is the commission which they are going to earn on that transaction. Take for instance, whereby they have sold $1,000. If the commission earned on that $1,000 is only 2,000 naira, is the 2,000 naira that is liable. Is not the whole of the $1,000 that is liable, because that is their own stock in trade.
Now to the crux of the matter, value-added tax, VAT.
Commission earned is vatable in the hands of the BDC operators. The truth of the matter is this: while you are selling, you are expected to charge VAT on that commission when you are selling the forex to your customers, because it's the customer that is enjoying the service. He has to pay. But in most cases, some of you will say, I know, if I charge them VAT, they won't come back to me. Yes, this has happened in the insurance industry, whereby the insurance operators will also tell you that the brokers will have deducted their commission before remitting the remaining premium to them. Then there was this problem: how do we charge VAT on the commission? What we now told them is that you cannot use your business practice to negate the law. The law is very clear. So please, you are the collection agent of government in this wise. So ensure that you charge the VAT.
A lively debate followed the paper presentation.
We're having issues mostly with the products as listed here, that most of them are sold at a profit margin and not at commission. So if it's sold at profit margin is not vatable. That's our understanding of the grammar.
As a BDC, we are entitled to $50,000 from CBN each week. In a year, that's about 377 million. If my turnover in a year is 377 million, going by the commission allowance that CBN gave us, I'm expected to get a profit of about 7,500,000 in a year on 377 million. If I'm a tax consultant and I walk into your office and I see your turnover to be about 377 million, and you are telling me you make a profit of 7.5, I stand not to believe you. But that is the truth. And out of this 7.5 million commission, which equally is our profit we get, we are expected to have 5 staffs. So by the time we pay salary of 5 staff, we pay rent, you pay depreciation because we are not expected to be carrying such amount on feet. You buy vehicles, you do administrative costs, then the 7.5 is gone. And if the 7.5 is gone, I'm asking these questions: where will I charge my tax? Then my last observation or my last request is, if we are to charge VAT on customers, to me, if I'm a customer and you are charging VAT, you're adding VAT to your cost, I will simply tell you, I have alidu somewhere. I will just walk out and go and change my money in the black market. Is there a way FRS can probably work along with CBN or push it across to CBN to allow us include that VAT in our commission? Because if the VAT is included in my commission, a customer will just walk into my office and how much are you selling? I'm selling 160, I'm selling 159. It's me that knows that my VAT is already included.
For the VAT, I've told you, it's not your own business to pay. It's for your customers to pay. They are the people that enjoy the service. And if it's because the way Bureau de Change is being run, thank God you have your chairman here. When you have issues like that, that's what your association should work on. It's not a case of saying revenue wants to take the whole money from me. No, that is the law. But when you have issues with the law, your association can take it up with CBN, and CBN can in essence also take it up with FRS. But whereby you don't want your customers to pay so that they won't run away, then that's a problem to you. You better go and resolve it in your association with the CBN or even with the federal government. At least maybe the law can be amended, whatever they can, but the law as of today, that's what it says.
Mr. Adeboye, when you were doing your computation, you kept referring to your turnover of the $50,000 you collect from CBN each week. You kept referring to it as turnover. And it is a common problem in the industry. I remember when the lecturer was giving us that lecture, he did say that money is your working capital. So you yourself, don't look at it that it is your turnover. That is not your turnover. Your turnover is your commission. And that is where I am coming now, to link you and Mr. Mokoro together. Mr. Mokoro was asking, they told us it is profit margin, and the profit margin is not vatable, and it is because it is not commission. In business, you can call profit income. It's still the same thing. You can call turnover sales. You can call it revenue. So whether it is commission or it is profit margin, what the law wants is 5% of what you have earned. I have recently concluded audit on 10 Bureau de Change companies. So I know what I'm talking about. And what I have discovered is that why many of you will always have serious problems is in record keeping.
In addition to what my regional coordinator has just said, I want to add that the $50,000 that you receive from CBN is not all the income that you earn. We know that some other people come to you by way of business to come and either buy dollars or sell dollars. That is exclusive of the $50,000 that you receive from CBN. So you are not to restrict yourself to the $50,000 that you receive from CBN and then tell us that all your income is 7.5 million naira.
The chairman Bureau de Change Association had this to say.
We are being regulated by policies. In the course of CBN inspection, some of our members were suspended because they exceed the 2% margin. So we don't charge. And reason is that we are all Nigerians. Why they call on BDC to participate in this CBN window is to bridge the gap between the black market and the official market. We have written to CBN. Now look, FIRS, they are slamming us letters, okay, demanding VAT. You being our regulator and we work with your policies, if we charge these people VAT, don't come to our record and penalize us. It's better you have a meeting with FIRS, jointly come out with a guideline for us to work with. Okay? If tomorrow CBN say, okay, charge this, it becomes a policy and law for us to work with. Okay, sir. So in a letter they sent to us, that they sent letter to FIRS to clarify if foreign exchange transactions are taxable or vatable. All other tax or all other income tax, every other thing, we comply, sir. But our problem is this VAT. So you will help us with CBN. We have sent letter to chairman, which you have copy, and the CBN will meet with you. Probably they may call us too. So the outcome we work with, we are law abiding.
Why is FRS charging VAT? FRS is charging VAT because that is the law as at today. And you know, it's as simple as that. And why VAT, even in the first instance? VAT is a VAT on consumption. And the beauty of VAT is that if it is properly managed and properly paid by you and me, I bet you it can also make government to even reduce the corporate tax rate. Yes, that's where we are even going to. Go and read the national tax policy. It is clearly stated there. And I even want to tell you that unfortunately, Nigeria charges the lowest rate of VAT in the whole of Africa, even in the world. Yes. In fact, I presented a paper in Abuja at an international conference about 2 weeks ago. I told them that even in Malawi, VAT is as high as 18%. 18%. And like I explained to you, it's not even for you to pay it. It's for those who are buying from you. Because you talk of double taxation. Somebody talked of double taxation over there. No. It's for those who are buying from you. So it's not a question of we want to take from your money. It's for those who are buying from you. But because you look at it that they will run away to other customers, the best thing you can do is to enforce it among yourself. That's why you have association.
Let me ask you, what do you make of all this?
The law is the law.
The law is the law.
Now what do be this? Make it say where you? The thing where you said me too much, calculation is where okay.
Madam, me correct now. Now the price be that.
You are playing with fire, so me I know say they never search fast for picking things. Oh, you want to play me while you? You want to teach me a bit?
Madam, now everything with the add back on top. Now so with the seller.
Mbo.
Madam, you dey correct.
Stop.
Good day, madam. Any problem?
Problem there.
The thing be say una not supposed to charge VAT for baby items and other things wey dey for VAT exemption list.
Sam.
Chai! This one na wayo receipt o. Correct receipt suppose contain the things wey you buy and the VAT wey dey on top. Then other items wey not get VAT, you go put them separately.
Madam, I apologize, You go change that.
Change that. You see say we don't know wetin government.
To pay VAT dey compulsory. Na government dey use to make our life jolly, to collect and pay sharply to government. E dey correct.
FIRS, it pays to pay your tax.
The program is still Tax Matters, and our next story is on pretty much the same topic. In the last story, you heard about the rules of Bureaux de change operators as agents of deduction and remittance of VAT. This time around, we're talking about the same rule as agents of deduction and remittance of VAT for microfinance bank operators. Christina, it's your story again.
On Thursday, July 3rd, it was the turn of the microfinance banks in the Southwest region to rub minds with top echelons of the FIRS in the Southwest region. Again, the issue at stake was the need for the microfinance banks to deduct value-added tax on transactions carried out by their customers as well as their obligations under the various tax laws.
This year, 2004 January, marks it exactly 20 years that VAT was introduced to the Nigeria tax system. And surprisingly, there are still some gray areas or some burning issues that remain unresolved to date. As we speak, some taxpayers still find it very difficult to accurately complete the VAT form 002. That is the one you do to file your returns on a monthly basis. While some sections of the VAT Act seemed ambiguous to some, I'm to be part of this sensitization through workshop, which is aimed at resolving the misconception, misinformation, and misinterpretation of the VAT Act. Also, this workshop will help to resolve the erroneous publication in some newspapers that microfinance bank operators are exempted from value-added tax.
To guide the discussion for the day, 3 papers were presented.
At the inception of the law, there were a list of vatable items, and there are lists of exemption, and there are lists of non-vatable items. We found out that some items were missing in either vatable or non-vatable. So, by Decree 31 of 1996, vatable goods were redefined under Section 2 of the VAT Act, which said any goods or services that have not been exempted or zero rated is vatable. Financial institutions is generally highly regulated, and as a result of the high regulation, the operation of VAT in financial industry is also different from any other trading or manufacturing industry. In determining what constitutes a vatable income, distinction of what constitutes a consumption or service and return investment must be made. For a consumption or service, what is vatable here is those ones that are strictly consumption, e.g. fees and commissions, in whatever terminology. But when you are talking of interest on loans and advances, those ones are not vatable. What are non-vatable income under financial institutions? Those are those that relates to returns on investment, with a section of commercial rent. Commercial rent is vatable. Unlike microfinance, community banks and mortgage banks were specifically mentioned in the exemption list in the VAT law. In the law, VAT law, microfinance was not mentioned specifically.
Mr. Ohagwa's paper elicited a heated debate from the audience.
As grassroots institutions, most of their customers are uninformed, artisans and petty traders. Having these groups of people in the tax net may not be in the best interest of the financial inclusion policy
of the federal government of Nigeria. Quoting the central bank in some of the meetings held with the Committee of Microfinance Banks in Nigeria, unit microfinance banks in Nigeria are exempted from collecting value-added tax from their customers. If microfinance banks are put under the weight of severe and several taxation in whatever name, the role the federal government requires them to play in alleviating poverty will be eroded, and even the Federal Inland Revenue Service will not be in a position to collect other taxes, and also the motive of financial inclusion strategy of the federal government will be defeated.
I think those people that wrote the VAT law agree with the fact that they don't want to put the burden on the poor. And Microfinance Bank was not in existence in 1993 when community banks were there, and they were exempted from VAT. If Federal Revenue Service is proposing amendments to Nigerian tax law, why don't you wait until those tax amendments are adopted by the government before implementing VAT?
There's a misunderstanding between ownership and operations. If I have money and I have the philanthropic zeal, I can create or get my friends together to register a microfinance bank that solely caters for the active poor. It has nothing to do with whether I'm a fat cat investor, but who is the institution providing for. And one of the constraints by central bank is that your lending must be 80-20. 80 for microcredit, and central bank defines microcredit as a maximum of 500,000 naira. That, for all sense and purpose, is not meant for fat cat. You look at this thing, you have to be very, very careful that we are not just trying to get the money and kill the industry. What is the industry targeted? What is it supposed to achieve?
Mr. Ohagwa responded this way.
The current amendment of the VAT law, whether the service would have waited till when the amendment is done before implementing this. With due respect to this gathering, you will agree that FRS does not make law. Rather, they only make input into the law. Even during the National Assembly sitting, we don't go there to argue. It's stakeholders like you that will make input. If you make input to National Assembly today and they amend it, we are humble servants. So we should not misplace the aggression. It's not us that make the law. To that extent, what we are talking is that the law as it exists now.
The regional coordinator, Mr. Moses Okpanike, presented a paper on overview of company income tax, value-added tax amendments, and the Nigerian Information Technology Development Agency levy and their implications.
Let's go to NITDA, that is National Information Technology Development Levy. Maybe some of you that don't know that it affects you. NITDA is a levy that was introduced in Nigeria in 2007 by National Information Technology Development Act 2007. Just like education tax, FRS is just what? An agent. Every kobo collected for education tax is paid to Education Tax Trust Fund. The same thing with NITDA. Who are the people affected? Banks and other financials, including capital market operators, mortgage finance, and microfinance institutions. Is 1% of what? Of profit before tax. For all the companies in those categories, not for everybody. Manufacturers, no. As long as your turnover is 100 million and above, you are supposed to pay 1% of what? Profit before tax. Now, all the mortgage banks at the microfinance bank, you are here. You are covered by this act. You are supposed to pay. However, the only condition that if your turnover is not up to 100 million, you are exempted. The commencement date of the act is 24 April 2007.
We thank you most sincerely for watching today's episode of Tax Matters. We do hope that in our only two way, we have been able to further educate and enlighten you about the workings of the Nigerian system and your roles, your duties, and responsibilities as good corporate citizens of our dear country, Nigeria. Let's see you again next week. Same station, same day of the week, same time of the day. From Christina.
Thank you for watching and bye for now.
Have a blessed week ahead.